10 days into December, we're dealing with a month to date that's presenting some strength in places that it had not been the last 1 month and so far in the quarter. It's our job at least once a week, if not preferably a couple times a week, to take a look at what sectors are moving higher, and then obviously what stocks are moving up within those sectors, and then what those sector strength movements mean to the broader averages. Okay, so let's put that together here on this screen. This is the month to date look at sectors. And right now, month to date, number one is XLY. Now, if you've been watching videos with me for any length of time, there's two stocks that are going to come to mind right away. Amazon and Tesla. This is number one and number two weighted stocks in the consumer discretionary ETF, which is sitting at the number one spot. What does that mean? Well, consumer discretionary strength is going to disproportionately, if not nearly solely, benefit the NAS. Secondary impact will be the S&P because, of course, both these stocks are weighted in the S&P. But this is really a NASDAQ sector, consumer discretionary. So think of it this way. You've got the NAS at the top of the list, and you've got consumer, let's call it consumer discretionary, and then you have all the stocks that are weighted within consumer discretionary. So Amazon, Tesla, and actually Home Depot is the third weighted stock. So Amazon, Tesla, and Home Depot. And so what you have here is index, sector, and then stock. And that's the watch list building process. Now, if I did the same thing with JETS, this would lead us to names like UAL and DAL and Love. Alaska Air has been in fuego lately. You go down to XLK, disproportionately benefiting the NAS? Absolutely, but unique amongst the sectors, XLK is heavily weighted within the NASDAQ, the S&P, and the Dow. Index sector stock, well, all the indices. XLK to individual stocks, this is Microsoft, this is Apple, this is NVIDIA. But it does not mean that everything within that sector is moving higher. Here's a look at the jets. All right, so here's UAL uptrend, AAL uptrend, Love uptrend, Alaska Air, Allegiant, these are in uptrends. If we head on over to that number one sector that I mentioned, consumer discretionary, here we have Amazon, Tesla, Home Depot. All three of these have continued to hold their uptrends. TJ Maxx, Chipotle. I skip over Booking because I don't know anybody who trades Booking, including myself. These are the names that are moving higher within XLY. What about XLK? This is the technology ETF. This is where you've got Apple, NVIDIA, Microsoft. And you might say, what gives NVIDIA? How come you're not participating? It simply is not. You'll notice ABGO is not either, right? So some of these names really are not. Qualcomm, laggard. AMD, downtrend. Avoid semiconductors. This is not the time to go bottom picking in semiconductors. XLK is being led higher by mostly Apple, Cisco, Adobe, Now, and IBM. Those are those heavily weighted stocks, top 14 stocks, that are sending this sector higher and in turn helping the NASDAQ move higher. If we take a look at the NASDAQ by cracking open the QQQ, that's my mom. If we crack open the QQQ, all right, here we go. Take a peek at what we've got right there. All right, so if I take a look at QQQ, what's moving higher within QQQ? Let's mute that phone. All right, Apple, Amazon. This is your Magnificent Seven, most of which are not all that magnificent. What's behind the clock is NVIDIA, just so everyone knows. So you got Apple, NVIDIA, Microsoft, Amazon. But what's in an uptrend? Apple, Amazon, Tesla, right? So not all the magnificents are all that magnificent. And this is where traders are going to get oftentimes into trouble this time of year, where strength tends to get stronger. We're talking about the ongoing evolution of some of the strength names at this point in the month. A couple points of caution, although they're not off the list, but it's very different. Financials have been one of the strongest sectors, as have regional banks, for the better part of nearly 2 months. Something's changed, right? The surge we saw in November has not continued into December. There are two stocks in uptrends at the moment, MasterCard, Citi. But take a look. Any of the individual stocks, JP Morgan, Visa, American Express, you can see there's a number of stocks that are dominated by green candles right now. And those green candles are telling us we have the bullishness. Schwab is another one. I'd keep an eye on Schwab too. So you have your top tier names, MasterCard, Citi. Then you have your next tier. Next tier would be things like green candles, but no trend, neutral trend, right? And that's where things like American Express or Goldman, that's where things like Schwab, Visa, JP Morgan would be at that next tier down. This is the reality of where we are in December. And this is the reality of a receding pool of uptrends. As long as you are discerning about where you're choosing to buy the dip buying is still absolutely working. The two best trades that I've had so far of the last 3 to 4 weeks have no doubt been Amazon and Walmart, and they continue to be the gifts that keep on giving. My challenges, my stops, getting stopped out has been mostly things like energy. Getting stopped out, actually most recent trades in things like financials and even industrials, which were pretty strong the last 2, 3, 4 weeks, and they've started to falter. And so my current book of trades looks like this. Open swings in Wells Fargo, Amazon, Walmart, communications, which we scaled out of today, so that's now a winner. Walmart and Cisco, which has been hanging on by a thread. We closed trades yesterday. So this video is from Tuesday. For Tuesday, Monday, I closed out a Disney position. That's an XLC. Communications have been strong, but Disney's been faltering. XLI, the Dow's been all right, but industrials have not been getting the memo. Neither has financials. So this is where we sit, going all in on what's been working, focusing on those relative outperformers. Remember, gang, you gotta keep in mind winners and losers. Can't discuss just winners. That's only half the conversation. If we're gonna have a conversation about how we've done in 2024, here's a great place to start. What were your top 5 winners? What were your top 5 losers? How much did you make per contract with your top 5 winners? How much did you lose per contract with your top 5 losers? What percentage of your account grew with your top 5 winners? What percentage of your contract of your account did you lose? So what percentage of your account did you lose with your top 5 losers? That's the way to start thinking about the year, to have a really good measured look at if you are putting risk in your favor, letting your winners run and cutting your winners quickly. And I can just hypothesize if this has not been a good year, it may not be because you didn't have some good wins, but it's probably because you did not cut your losers quick enough. Food for thought as we're rounding out 2024.
Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.